October the 14th. This is Westpac London's end of day report. Mostly positive sentiment in equity markets today, following a range of developments and news items, which I'll run through first. We had Google's latest earnings result, which pleased markets, and that's certainly one factor underpinning the positive sentiment in equities today. A range of developments in Europe, though, not all of them positive. We had Fitch downgrade. S&P downgrade the sovereign debt of Spain another notch down to AA-. That followed the similar action by Fitch not so long ago, so it wasn't really fresh news for the market. S&P cited concerns about the economic growth outlook in Spain. We had the confidence vote in Italy in the Prime Ministership of Berlusconi. He narrowly survived that. So the Berlusconi lives to fight another day in Italian Parliament. You can say what you like about Berlusconi, but he does tend to be a survivor, and he certainly demonstrated that this week. He's got a tough job ahead of him, of course, in terms of convincing financial markets that Italy is serious about austerity, and there are concerns, of course, that Italy, along with Spain, could be sucked into the sovereign debt crisis to a greater extent than they have been. It's arguable whether or not a change in the Prime Ministership would have actually been a positive or a negative, but that's the result as it stands. Berlusconi is still Prime Minister in Italy. We've got the G20 finance ministers meeting in Paris at the moment. We understand they're discussing the sovereign debt crisis, of course, including a possible bigger haircut for creditors of Greece, the bank recapitalisation scheme, the expanded European financial stability facility, and so on. We may start to get some leaks or off-the-record comments about what's been decided over the weekend or during the next week, or we may have to wait until the Leaders Summit, European Leaders Summit on the 23rd and 24th, or we may indeed have to wait until November 3rd when we get the G20 leaders meeting down in Cannes in the south of France. But certainly the fact that things are happening in Europe seems to have been mostly positively received today. On the data front, some good news as well for the US economy, with a decent retail sales report for the month of September. It included back revisions as well. There was a 1.1% rise overall in September, and excluding autos and gasoline, there were decent rises as well. So along with the healthy jobs report for the month of September, relative to expectations, we've now had a solid retail report too. And of course, the two go hand in hand. If household income is growing because people are being employed, they tend to be able to spend more, and that certainly meant that at the end of the third quarter, the US economy looked a little bit more robust than we had expected to be the case. Not supportive of our view that the Fed will embark on another round of quantitative easing anytime soon. That said, the latest read on consumer sentiment for October from the University of Michigan, it fell almost 2 points, 57.5, very close to Westpac's bottom of the consensus 57 forecast. And at that level, its confidence is running where it was at the depths of the 2008-2009 recession on the UOM measure. In fact, for the last 3 months, it's been bouncing around that low that it last saw back a few years ago. So if confidence or sentiment holds at these lower levels, that could be a sign that the blip that we saw in the favourable jobs and retail numbers for September is not being sustained. Recall this is a preliminary read on October from University of Michigan. Nevertheless, they are the main bits and pieces to mention in terms of events. As I said, it's been a positive day for equity markets with still an hour or two to trade. It's only 3:30 or so in London at the moment. I'm having to do this early because I'm off to Rome for the weekend. We've got the FTSE up 1.7%, the French market's up 1.7% as well, and the German DAX is up 1.9% today. And about an hour into trading, we've got a 1% gain on the Dow. It's at 11,598. The broader S&P measure is doing a little bit better at 1.3% higher and 1.4% for the Nasdaq, probably reflecting the generally positive sort of techo stocks sentiment flowing on from the Google result I mentioned. Commodity prices doing very well today. We've got a 3.4% rise for sugar. Copper prices are up 3.2%. Crude oil is up 3% at $86.77 a barrel, and gold's up about 2/3% today at $1,678 an ounce. The Aussie dollar's doing pretty well too. It's at 1.031 against the US dollar, continuing to climb. It's been supported by the positive equity market sentiment, and the decent news on the US economy has been helpful as well. What's good for the US economy is good for the global growth story, and is tends to be good for the Aussie dollar. That are the main points to make today. We may or may not have a report on Monday, because I'll be away on Monday, but we'll try to get a report to you. I'll certainly see you, if not on Monday, on Tuesday next week. Okay, thanks and have a great weekend. Bye.